Markets are euphoric, valuations are stretched, and investors are chasing the same overhyped names in artificial intelligence. Yet history tells us this is exactly when the real fortunes are quietly made elsewhere. While Wall Street obsesses over Nvidia and Microsoft, the true foundation of the AI revolution is being built in the shadows by just a handful of companies. And here's the unsettling truth. Without them, this boom collapses. In the second half of 2025, a rare moment has emerged. AI demand is surging, hyperscalers are unleashing capital at levels never before seen. Yet three critical players, Micron, Arista Networks, and Supermicro Computer, remain overlooked, misunderstood, and in some cases, even punished by short-term fear. Capacity is already sold out years in advance, orders are climbing, and these companies are becoming indispensable to the future of AI. This is no ordinary opportunity. It's a moment where fear clouds judgment, where the crowd rushes in one direction, and where long-term value is born in the opposite. The question is, will you recognize it before the market does? In this video, we'll uncover exactly why these three companies are not just beneficiaries of AI, but the essential backbone of the entire revolution. First on the list, let's talk about Arista Networks, Incorporated ANET, a company that has firmly established itself as one of the biggest winners of the AI infrastructure wave. Arista might not generate the same headlines as Nvidia or Microsoft, but it is quietly powering the backbone of the modern digital economy, the networking gear that allows hyperscale data centers to function. Without Arista's ultra-fast switches and Ethernet systems, the massive computing clusters driving artificial intelligence simply wouldn't be able to move data at the speed required. That's why Wall Street has been buzzing after the company's latest blowout earnings report. In its second quarter results, Arista didn't just beat expectations, it crushed them. Revenue was up 30% year over year, margins expanded, and free cash flow surged. More importantly, management raised full-year revenue growth guidance from 17% to 25%, a dramatic jump that signals how much demand they are capturing from the cloud titans. JP Morgan even noted that Arista is on track to hit $10 billion in revenue by 2026, a full 2 years ahead of schedule. That acceleration isn't luck. It's fueled by the unprecedented spending spree from hyperscalers like Microsoft, Amazon, Google, and Meta, who are collectively throwing hundreds of billions into data center build-outs to keep pace with AI. Microsoft alone is boosting its capital spending to around $120 billion, while Google has raised its forecast to $85 billion, and Meta is set to spend $70 billion. That money doesn't vanish into thin air. It flows directly to companies like Arista, which provide the networking architecture to stitch these AI supercomputers together. In fact, Arista has been steadily taking market share from legacy competitor Cisco, doubling its installed switch ports in data centers in just the past 4 years. Yes, the stock trades at a premium, but the reality is that Arista is riding a once-in-a-generation investment cycle. As AI workloads scale through the rest of the decade, the demand for faster, more efficient networking will only intensify. With its proven execution, rising market share, and direct tie-in to the cloud giant's capital expenditure boom, Arista Networks looks positioned to remain one of the essential, if often overlooked, players in the AI-driven future. Next up, let's turn to Micron Technology, Incorporated MU, a company that has quietly become one of the most important players in the AI infrastructure boom. While many investors chase the spotlight names in semiconductors, Micron has been building its leadership in one area without which AI simply cannot function: memory. Its bread and butter is DRAM and more recently high-bandwidth memory HBM, which is the critical enabler of modern AI systems. These chips allow data to move at lightning speed, providing the throughput needed for training massive models like those that power ChatGPT. Micron is one of only a handful of companies in the world capable of producing them at scale. Recently, the company raised guidance, lifting revenue expectations for the fourth quarter to more than $11 billion and expanding gross margins to levels not seen in years. This isn't just a cyclical rebound. The resilience of DRAM pricing, even in the face of high supply, signals that demand is broad-based and anchored by structural trends rather than short-term surges. Data centers are consuming more memory per server than ever before, mobile devices are pushing up their requirements, and AI workloads are accelerating this shift. With memory intensity climbing, Micron's scale and cost advantages are finally showing up in profitability. Perhaps the most powerful catalyst, though, is HBM. Micron has already sold out its HBM capacity for 2025, an extraordinary signal of demand strength. Major chipmakers and hyperscalers are lining up for supply, knowing that without advanced memory, their AI accelerators cannot perform. Unlike commodity DRAM, HBM carries stronger pricing and richer margins, creating a longer runway for Micron's growth. This positions the company at the very heart of the AI revolution, not as a peripheral player, but as a foundational supplier. With guidance moving higher, margins expanding, and structural AI demand locked in, Micron looks like one of the overlooked tech names finally stepping into its moment. This is why many now call it time to jump back on the AI bullet train. Finally, let's talk about Supermicro Computer Incorporated SMCI, a company that many on Wall Street now view as one of the most fascinating comeback stories in the AI build-out. Unlike the traditional giants of the server market, Supermicro has built its reputation on speed, customization, and efficiency. It doesn't just sell off-the-shelf boxes, it delivers highly optimized server solutions tailored for hyperscalers, cloud providers, and AI-driven enterprises. That flexibility is exactly what the market demands in this era of rapid AI adoption, where customers need to scale fast and reduce power and cooling costs without waiting years for traditional hardware cycles. The company stumbled in its most recent quarter, missing both revenue and earnings estimates, which led to a steep sell-off. But looking closer, those misses were tied to temporary issues like delayed filings and customer specification changes, not a collapse in demand. In fact, revenue still grew more than 25% sequentially, a sign that core momentum remains intact. Management reinforced that point with bold guidance for fiscal 2026, projecting at least $33 billion in revenue versus the $31.9 billion Wall Street was expecting. That at least forecast implies 50% growth potential, showing confidence in the order pipeline. A key catalyst here is Supermicro's new DCBS platform, which promises 40% power savings, a 20% cut in total cost of ownership, and a dramatically smaller footprint. For data center operators battling skyrocketing energy bills, those savings are game-changing. Early deployments have already begun, and as DCBS scales across its expanding customer base, it could spark a major margin recovery. On top of that, Supermicro is tied closely to Nvidia's Blackwell GPUs, and its B300 and GB300 systems are expected to play a central role in the next phase of AI infrastructure. What makes this story even more compelling is diversification. Supermicro is growing its large-scale customer base from 3 last year to as many as 8 by 2026, reducing concentration risk while multiplying growth opportunities. For a company that has already delivered staggering multi-year returns, the path forward still looks promising. If management executes on its roadmap, Supermicro could very well turn its recent stumble into the next big AI-driven surge. And that's why so many see it as a top comeback play in today's market. So there you have it. Micron leading the charge in high-bandwidth memory, Arista powering the backbone of AI data centers, and Supermicro carving out its comeback story with custom server solutions. These aren't just side players, they're becoming indispensable to the AI build-out happening right now. The big question is, which of these stocks do you believe has the strongest runway for growth over the next 5 years? Let me know your thoughts in the comments below. And if you found value in this breakdown, make sure to hit that like button, subscribe, and turn on notifications so you don't miss the next deep dive into the biggest trends shaping the stock market. Thanks for watching, and I'll see you in the next one.